I think the same thing will happen in the S&P 500 and the NASDAQ. To put it simply, think about what the normal investor puts his 401k into without much thought. These are the ones. I also think he's pretty. There is a cliff right next to the stock market. Good news stories. And almost no one notices that the ground is breaking apart under their feet. A rare RSI divergence is showing the same kind of warning signal that has always been there before a big crash in modern times. Things are even more important this time. Analysts are calling it the rug pull of a lifetime because it means that retail buyers who have too much debt could be caught off guard overnight. But here's the catch. Silver is getting ready for the opposite move while everyone else is freaking out because their stocks are going down.
Gold has already broken through all support, which means the bull market in precious metals is just getting started. Silver doesn't just follow gold when it goes up, it bursts. Since there is no support above $50, silver could start a vertical rise that sends shockwaves through Wall Street as it charges toward $200. It's written on the wall. There is more and more pressure. It's a simple question. Are you going to be ready when the bomb goes off? This is the S&P 500. We can all look at it together. I'll also show you what the charts say. So, basically, we had what we call the Liberation Day sell-off, right here, right? This is when Trump dropped all of his blackboard threats, like tariffs, and the market just dropped a lot. After that, we had this nice run-up.
That would be great if you were interested in it. Up to where we are now, which is about $6,500. I also couldn't help but notice this trend line. It made me think that we were finally having the breakdown you're talking about. That happened last Tuesday. And the breakdown was not real. It came apart again. Right now, we are at new theoretical all-time highs. And yet, you can't help but notice this wedge shape, right? And when you get a triangle or wedge shape, I like to picture a pinball in a pinball game, right? It goes back and forth a bit and then snaps into place, generally very violently in one direction or the other. And if we look at the market as a whole, I think this is overvalued. Let me get rid of this bottom trend line if I forget about macro and only look at these charts. At this point, you should only look at the price of this upward channel trend line, right? You can also see that the price is slowly going up. The RSI is this purple and yellow line you can see below. Really strong index is what that stands for. And I see that as a kind of predictor of what will happen in the future. There is also some difference here. Since price is going up, the RSI is simply going down one after the other. We can see that the stock market's danger signs are no longer hidden. They stand out. The S&P 500 and NASDAQ both hit all-time highs because of AI craze, but below the surface, the base is breaking down. The market is now very narrow, with only a few big-cap tech names pushing the averages higher while the rest of the market stops moving or turns over. Morgan Stanley has already warned that equity risk premiums are at their lowest level in 20 years, which means investors are taking on the most risk for the least amount of gain. Goldman Sachs is warning about too much concentration, which means that the system is becoming too weak to handle. The numbers also tell the truth. On the S&P, the Shiller-Cape ratio is above 33, which is almost twice the historical average. On the other hand, the NASDAQ is priced at more than 28 times earnings. These prices aren't based on security. They're made on a bubble. It looks a lot like every other big top in history. Unsustainable happiness followed by a quick drop in mood. A lot of money won't just disappear when the bubble bursts. It will run away to find safety. In the past, that safety has been found in hard assets, with gold leading the way and silver always following closely behind with much more force. The S&P 500 should be rolling over here then. When you look back at September's past, for some reason, it's always a bad month. And the second half of the month is usually worse than the first. Based on past events and the likelihood that this is true, which is high, I believe we have reached the end of our buyers. This is where you can see that. These are the number bars. That is, as the last 4 days have gone by, fewer and fewer people have bought. That means there are more sellers than buyers, so I think there will be a rollover soon. These are the Qs. It's like the NASDAQ. So you can think of it as technology, right? Tech stocks, we're seeing the same thing. Prices are kind of going up here, as you can see. Things are beginning to level off now. A double top, which is a type of technical analysis that often predicts a top, has shown up here. There's a top here and one there that costs almost the same. You can see that the RSI is making smaller highs if we look back at what we just learned about it, right? That's why we have an RSI of 73 over here. Then we got one of 68 over here. Then we got one of 60 today. I think the same thing will happen in the S&P 500 and the NASDAQ. To put it simply, think about what the normal investor puts his 401k into without much thought. These are the ones. He's almost certain to get a rug pull, too. The number of jobs hasn't been great. Besides, when someone is losing their job, the last thing on their mind is how their stock is doing. They're marketing their collection in order to buy money to pay their bills. Their first and most important thoughts are about getting food, paying the rent, and the power bill. That makes sense, so that fits in with that. The dollar, or DXY, is another one I see here. This has been going down for a while now. We're going back to the 1960s.
We're going back to the 1960s. It has been going down for a while now. Now, we're at a point where things start to change. It has begun an upward trend, and this parallel channel here looks like it's pretty true. I'm not sure what I think about this. Does this mean that the dollar is going to fall and break this pattern? On the other hand, will the normal person freak out when they see this run on cash? This will go up if that's the case, and there may be a small drop in the prices of our goods in the near future. To be honest, I don't know, but I think this will get weaker over time. On Wall Street, September has always had a bad name, and this year is showing why. After the summer rally died down, volatility has risen again, and traders are getting ready for the famous September effect. In the past, this is the month when markets start to fall apart. Analysts at Reuters, Bloomberg, and other firms are already warning of a drop. Retail buyers who jumped in during the AI-driven boom are now at the greatest risk. There is a lot of speculative trading in options, a lot of margin debt, and dangerously low trust. When the cracks get bigger, the pull of the rug will not only shake portfolios, it will also break mood. And capital doesn't just sit there in that chaos. It looks for safety, and the metals always offer that safety. The flow of money can change very quickly when there is panic. Gold moves first, and silver follows like a freight train. It's almost like a machine. As stocks fall, safe havens take the hit, and silver, which has a smaller market size and more volatile prices, becomes the perfect place for wealthy people to dump their assets quickly. Here is the gold chart for the long run. The rate for each month is shown here. In the end, we were all okay. It happened. We got out of here. We've been talking about this for a long time now that we're in the 2000s. When will this ever happen? Technical analysts will also find this to be a very interesting trend. It's called a cup and handle. Here, the cup is taking shape, the handle is there, and now come the release. And some easy-to-find tools can help you figure out how high these will go. You just need to move your tool from the bottom of the cup to the top right corner of it. That gives us about $1,000. Then, if you go up to the exit, you can see that we've gone above and beyond that. It went up to 3,100 and more. That's the first thing a cup and handle are meant to do. The next goal was a cup and handle, which was the value goal. It's possible to set a progressive goal as well. In other words, you're just saying that you're making a percentage move. We'll call it a 100% move, since it's 99.94. Okay, so let's take that from the breakout and go all the way up to 100%. And that would mean that the price of gold could go up to more than $4,000. At that point, I think that will be one of our next gold goals. A tool called a Fibonacci extension is another way to do it. The only thing Fibonacci is now is a mathematical formula that was found in nature by the person who found it. Other places it can be found are in snails, honeycombs, and many other things. You can find it on stock charts when you do technical research. This is a long-term prediction based on the Fibonacci extension.